Right, I think we'll get started. I think there's a few people still joining, but we'll crack on. Morning, everybody. Thank you for taking the time to join. In today's webinar, we're going to go over the final draft umbrella legislation. We're going to recap what we already know to date, and then we're going to discuss any changes that were made in the Finance Bill 2026 with the detail that was released last Thursday. For those of you that don't know me, I'm Alex Moore, Chief Sales Officer here at Sapphire. I've been in the industry for the last 18 years. Seven of those, the last seven have been at Sapphire. So I've obviously been through many a legislation change in our market, and this is the latest that is impacting the supply chain. I'm joined today by Hannah over at Brabner's. Hannah, I'll let you introduce yourself.
Thanks, Alex. Hi, everyone. I'm Hannah Morrison. I'm an employment and recruitment lawyer at Brabner's. I also have over 10 years experience advising this sector specifically from umbrella companies to agencies, neutral vendors and end clients on the labour supply chain and legal and regulatory issues.
Perfect. Thanks, Hannah. So today, as I said, we're going to go over the final draft legislation. Obviously, the original draft was published back in July. We had the data, the final information last Thursday on the 4th. So I'm going to hand over to you, Hannah, if you could give us a recap of where we are to date.
Sure. So I imagine most, if not all, people on the webinar are already quite familiar with joint and several liability. So I'll just whiz through this. Joint and several liability is actually not a new legal concept. It's been around for a very long time, and it essentially just means that two or more parties can be held liable for a debt, and they can be liable to pay it in equal shares or unequal shares, or the person to whom the debt is owed, in this case HMRC, can approach just one of those parties to pay the full amount. Now, specifically in the context of umbrella legislation, joint and several liability is the requirement or the sort of notion that with effect from the 6th of April next year, another party in the labour supply chain will have joint and several liability along with the umbrella company for any PAYE underpayment. So Chapter 11 is going to be a new chapter to ITEPA, the Income Tax Earnings and Pensions Act. You'll probably be familiar with some of the chapters in there already that relate to things like IR35 and off-payroll working. So as Alex said, we had a draft of what the new Chapter 11 is going to look like over the summer. We have an updated version. It is still in bill format, so it is possible that this will change between now and April, but very unlikely. And essentially, Chapter 11 defines various parties in the supply chain, the umbrella worker, the umbrella company, and a relevant party. And the idea is that the umbrella company and the relevant party will be liable for any PAYE underpayments. Chapter 11 relates specifically to income tax under PAYE, but there will be separate legislation in relation to national insurance contributions as well. So in order to understand where that joint and several liability will sit in the supply chain, we need to understand these various different definitions. So an umbrella worker, for the purposes of Chapter 11, really straightforward, an individual who personally provides services to a client. So we're not talking here about the genuinely self-employed who aren't required to provide personal service. We also need to look at the definition of an umbrella company. Now, you might have an idea traditionally of what an umbrella company is. It's never been formally defined before, but it has now been defined for the purposes of JSL, and it's a very, very wide definition. Essentially, it's a company that carries on the business of supplying labour. It's a company in which the worker does not have a material interest, so it's not like a personal service company. And there has to be a contract between a party in the supply chain and the end client, under which the worker's services are provided, or under which the umbrella company gets paid in order to pay the worker. So very, very broad. Now, as I said before, this legislation it doesn't relate to to people who are genuinely self-employed. It relates to a worker who is employed by an umbrella company to provide services, so a contract of employment. There is already, as I'm sure you know, separate legislation in relation to CIS. That legislation will continue to exist. It isn't changed by this new Chapter 11. And as I've said, the definitions essentially mean that anyone providing their services through a personal service company, limited company contractors, provided that isn't a sort of sham arrangement, and we'll come on to that later, they are also excluded. So the existing rules regarding IR35 and off-payroll working and CIS will continue to apply. Joint and several liability relates specifically to circumstances where the temporary worker is employed under a contract of employment.
Perfect. Thank you for that. I suppose I'm just going to take you through some example supply chains then, and many of you on this webinar may have seen these example supply chains before and may have even seen these slides. And what I would say is, from the draft to what we received last week, in terms of who the relevant party is to hold that joint and several liability, there aren't any changes really. So these do remain the same, but I'll whiz through them just in case anybody who's on the webinar hasn't seen these before. So in the first and very simple supply chain, where you've got an end client that engages a recruitment agency specifically to find them their candidates, and that recruitment agency then engages an umbrella company to facilitate the employment and the payroll for the umbrella worker. It's the agency and the umbrella company that hold the joint and several liability. So this is probably the most common supply chain in the market. It's a nice and simple one. There's some that are far more complex and much longer than this. But in that very simple scenario, it's the recruitment agency and the umbrella company that hold the joint and several liability. The second, I'd say, most common supply chain we see in the market is where an MSP is in the supply chain. Now, we've used the term MSP here, but you could change that out for MSP, neutral vendor, RPO, whatever terminology you want to give to that type of intermediary business. But where you've got an end client that outsources their recruitment to a managed service provider or a neutral vendor, and then that MSP or neutral vendor then engages multiple recruitment agencies to supply into them, and then those agencies use multiple umbrella companies to supply into them. In this scenario, it's the MSP that actually holds the contract with the end client. So they're the ones that are the relevant party, and it's them that hold the joint and several liability with the umbrella company. And we'll probably come on to it a little bit later, but this is probably where we're going to see the biggest change, I think, in the market. If there's no agency in the supply chain, this is probably less common, but it does happen. You do get end client businesses where instead of outsourcing their recruitment to recruitment agencies, they might have an internal recruiter. That internal recruiter sources the roles, but then they still outsource the employment and the payroll to an umbrella company. In this scenario, it's actually then the end client and the umbrella company that hold the joint and several liability. As it stands at the moment, I'll be honest, I don't know how many end clients actually understand that this legislation is coming in, because in the main, it doesn't really impact them. Because like you've just seen in the two prior scenarios, which are definitely, the majority of the market, the end clients aren't liable at any point. So this is probably only a very, very small proportion. And because of that, I think at the moment, from an end client point of view, there's probably very little engagement with joint and several liability. But that will likely change as time goes on and there's more conversations with clients and their recruiters and MSPs. In this scenario, this was in the draft legislation back in July as well and has remained unchanged. But this is all about material interest. And so to put it simply, if an MSP, a neutral vendor, or an agency has any material interest in an umbrella company, so that is if they own an umbrella company, if they have an umbrella company within their group structure, if one of their shareholders has 5% or more shareholding in an umbrella company, there's a few different examples that can classify as material interest. But in a nutshell, if an MSP or an agency owns or has some material interest in an umbrella company, then that actually shifts the joint and several liability away from the MSP or agency back to the end client. So the end client hold the joint and several liability along with that umbrella company and not the agency in between. And this isn't that common in the market, to be honest, but there are a number of agency or MSP neutral vendor owned umbrellas. So this is definitely something that, although it's not been talked about a great deal at the moment, especially at an end client level, because again, echoing what I just said on the last set of slides, most end clients probably aren't that engaged with this bit of legislation so far. I do think this will probably be more of a conversation point going into next year. So that gives you an overview. And I suppose whilst the draft legislation in the main does remain unchanged, I think that's very clear to say. There hasn't been loads of changes to it. There definitely have been a couple. Hannah, I know that there's some changes to the purported umbrella section within the legislation that came out last week. Could you just explain that to us, please?
Sure. So this idea of a purported umbrella was in the original draft version that we got in the summer. And essentially, this is designed to try and capture circumstances where a business tries to effectively wriggle out of the definition of an umbrella company to avoid joint and several liability applying. Um, and as you would expect, this sort of wording around purported umbrella companies is drafted very, very widely to try and catch all those sorts of situations. So in essence, if sorry, excuse me, if an umbrella company is engaged, is sort of holding itself out as employing the temporary workers as an umbrella company generally does, but actually is creating some sort of substructure so that the umbrella workers aren't actually employed by the umbrella company. So, for example, actually putting their earnings through a personal service company where they're not genuinely sort of self-employed or outside IR35, or creating a structure whereby that worker has a material interest in the umbrella company and is perhaps paid through dividends. The idea behind the purported umbrella sort of section is that if it is reasonable to suppose that somebody in the supply chain, let's say the end client or the master vendor, would assume that the umbrella company was actually employing the individual because, for example, that's what the umbrella company has said, or that's what their marketing literature suggests. And perhaps they've not been very transparent about the fact that actually the worker is being engaged in a different way. So if it'd be reasonable for a party in the supply chain to assume that the umbrella company is actually employing the worker, even if they're not, then joint and several liability will apply. Now, as Alex said, when we got the sort of latest edition of the draft legislation last week, there was a new example, a new sort of case study, I suppose, inserted into the legislation to try and capture another type of situation. And it's one that I think came onto HMRC's radar after the initial legislation was released and caused them, I think, a little bit of concern. And that is where an umbrella company might look at changing the engagement of the workers so that they're no longer employed on contracts of employment, and instead they're moved on to a contract for services or a worker contract. So as I said at the start, this new Chapter 11 only applies where the temporary worker is actually employed on a contract of employment, or where it would be reasonable to suppose that they are actually employed on a contract of employment. And so the question then arose, well, okay, what if umbrella companies wholesale change their business model, move workers onto contracts for services? They'll still get holiday pay, sick pay, etc. But actually their status has changed from worker to employee. Does that bring them outside of Chapter 11? Now, we'll come on in a little bit to talk about Chapter 7, which does relate specifically to workers. But essentially, again, if it would be sort of if that has been done in an attempt to avoid Chapter 11 applying, and if that umbrella company is not actually acting in the capacity as an agency and sort of sourcing assignments for workers, they're simply engaging them for the purposes of, their employment rights and payroll, but they've put them on a worker contract rather than an employment contract to try and avoid Chapter 11. These purported umbrella provisions would catch that and would mean that Chapter 11 could still apply.
Yeah, that makes total sense. To be honest, we had heard a couple of people say that example. We've got the draft legislation in July. It's talking all about employees, and obviously there's three different worker classifications, right? You've got the self-employed, you've got the employed, and then you've got workers, which is complex in itself, as we all know. And it came across my radar that people were saying, well, if we had our umbrella candidates as workers instead of employees, does this get around Chapter 11? Obviously that wasn't from our business, that's other individuals citing that and wondering whether that was almost like a loophole, which would have been quite an obvious loophole if they hadn't made the changes that they have to this purported umbrella section that they have done. And so I think it makes total sense that they've understood that that question was in the market. You know, they've obviously taken that from the technical consultation that happened, taken that feedback, and then updated this purported umbrella section to say, regardless of whether an umbrella engages them as an employee or a worker, they're caught by Chapter 11. So nice and simple. There's really not any options to get out of Chapter 11 if you're an umbrella company. In terms of then, maybe we'll skip to agency PAYE first, because there was a lot, again, off the back of the draft in July. There were questions around agency PAYE and a few different opinions in the market as to where this sat. I'm confident that we understood that from our point of view, but it'd be good to get your take on where agency pay as you earn now sits.
Yeah. So my take is that agency pay PAYE has always sat and continues to sit under Chapter 7 of ITEPA. So Chapter 7 is the agency worker chapter, which essentially says that where an agency worker is being supplied to work for a client, unless they are truly self-employed, then their income has to be treated as employment income and put through PAYE, and it is treated as employment income from the agency at the top of the chain closest to the client. So that sort of mirrors this provision in Chapter 11 with the relevant party that, excuse me, essentially it's the agency or the party, it might be an MSP, with the contract directly with the end client. So again, if an agency is engaging temporary workers as workers on contracts for services, their income is subject to Chapter 7, is therefore subject to PAYE, and that has always been the case and will continue to be the case. If an agency is actually employing the temporary workers, which I appreciate in reality is fairly rare, but does happen in some situations. Then if you think back to that very broad definition of umbrella company, which I explained at the beginning, essentially a business which employs workers, supplies those workers to work for a client, and there is somewhere in the supply chain a contract between the client and another party under which this arrangement is facilitated. That is an umbrella company for the purposes of Chapter 11. So if you have an agency actually engaging temporary workers on its own books on employment contracts rather than worker contracts, that agency would be deemed to be an umbrella company for the purposes of Chapter 11. And in that instance, unless the agency is supplying through, let's say, an MSP or a neutral vendor, if that agency has a contract directly with the end client has joint and several liability with the agency for that PAYE. But if those workers are engaged, as they traditionally are, on worker contracts with the agency, then Chapter 11 doesn't apply, but Chapter 7 does and always has done.
Makes sense. We've been having that conversation with our clients over the last few months to try and understand from their side, how are they engaging their PAYE workers? And like you said, the majority do engage their contractors on PAYE via worker contracts and not employee contracts. There definitely are some businesses, though, for many different reasons, that do engage them as employees. So those ones that definitely do need to be looking into this in far more detail, don't they? And having an understanding with their clients of how that impacts them. In terms of then NICs, we obviously have talked today a lot about income tax, ITEPA being income tax and pensions earnings, but where does the national insurance sit now then from a joint and several liability point of view?
Yeah, we've had confirmation that essentially there will be mirror provisions in relation to national insurance, so it will cover both income tax and NICs.
Perfect. Nice. In terms of what's happening next, then, Hannah mentioned earlier, obviously this is the final draft legislation, but with anything that HMRC and the government do, it's never a really quick process. And so that draft legislation now, that final version needs to go through parliamentary readings. And once they've gone through 2 more parliamentary readings, it will then go to royal assent. And once it's gone through royal assent, that is when it is put into law, and it would then be live on the 6th of April next year. As Hannah said, we don't expect, there's never really been any changes to final draft legislation at these 2 stages here. That is pretty unheard of. But this is the process that we have to get through to actually get something in. So they're the next few steps that we'll be looking at. One for you then, Hannah. What do you think agencies should be doing right now to prepare for this legislation?
So I think step one is to look at your preferred supplier list. And if you haven't got one, I would really strongly recommend that you need to put one in place. And even if you have got one, I would recommend that you look at it and you potentially consider condensing it. Um, and you can only really make that decision about condensing it once you've done some very detailed due diligence on those umbrellas that are already on your PSL or that you're already engaging with. Um, to sort of satisfy yourself as far as you can that they are acting compliantly and accounting for PAYE as they should. Because one thing that we've not mentioned so far is that this joint and several liability is what we call a strict liability. There is no defence to it. So as an agency, you can't say to HMRC, well, look, I did really detailed due diligence. Look, here's a copy of all the questions I asked of the umbrella company, and I made sure that I was only working with umbrella companies that were accredited by the likes of FCSA or SafeRec. And therefore, I shouldn't be liable if this umbrella company hasn't paid what it owes. That will not be a defence. If there is an underpayment, and if you are the relevant party, you'll be jointly and severally liable with the umbrella company. So you really need to understand that the umbrella companies you're working with are sort of financially stable and, as far as you're able to tell through your due diligence, compliant. And doing that level of due diligence on a very, very wide range of umbrella companies, I think in reality is just not going to be practical, which is why I'm saying you need to maybe consider condensing your PSL.
Perfect. Makes sense. To be honest, we're hearing and seeing the exact same from agencies and MSPs in the market. There's obviously been a lot of discussion across the recruitment sector since the draft came out. We are finding that the general approach is that people are looking to implement strict and tight PSLs. Now, a lot of businesses already had PSLs in place, but even those that already had PSLs in place are still evaluating their supply chain, reviewing those, and doing it with far more tight due diligence than they ever have done before, because this risk is real. And we can go on to, some of those things that you've just mentioned there in terms of those criterias. But I think by the end of January, most businesses will have these strict and tight PSLs in place. And then obviously there are businesses that for whatever reason haven't had PSLs in place to date, and those that haven't have obviously got a bigger job on their hands. But right now they are looking to implement those PSLs and transition candidates onto those PSLs. So that's definitely what we're seeing.
Yeah. And how
Uh,
do you think this JSL legislation is going to affect the market generally?
yeah, I think I'll be honest. I do think there's going to be a lot of contractor movement over the next few months. But ultimately, the way that agencies currently engage with umbrellas, that's going to remain the same. Yes, PSLs are going to tighten. Yes, there's going to be more due diligence. Yes, there is more risk. There's no getting away from that. Actually, operationally, how we all support each other today will remain the same going into April next year. But because those PSLs are tightening, we're definitely going to see a lot of contractor movement. I think a lot of that movement is going to be over February and March. We are trying to encourage our clients to try and get ahead of the rush, but it's obviously very difficult because candidates, unless they're given a deadline and unless everybody in the market does this transition at the exact same time, candidates have still got that willpower to say, well, actually, no, I'll go to this agency who haven't quite put their PSL in place yet and aren't doing this transition. So I do appreciate, from a recruitment business and MSP point of view, everybody needs to move forward with their new PSLs and with that transition at the same time. Obviously, that is going to put pressure on those businesses because contractually they've got to update assignment schedules and contracts for the umbrella candidates that are moving suppliers. It's going to put pressure on the umbrella companies that are going to have an increased volume over a short period of time. But obviously, there's a lot of work that we're doing in the background to ensure that we're prepared for that, and to ensure that we've got the capacity. I do think that probably going into September onwards next year, I do think we're going to see a lot of consolidation in the market. Once everything's actually landed where it's going to land, I think there will be some consolidation within our sector. I think there will be, because I think the biggest change is going to be the MSPs and the neutral vendors. To date, it's always been the recruitment agencies that have had their PSLs in place, and that's what's been dictated to their candidates. But because the MSPs and neutral vendors are the ones in that example supply chain that have got the joint and several liability, we are seeing that they are implementing their own PSLs and they're dictating those PSLs to their agencies that supply into them. And that's a bigger transition. That is a bigger change. Some of those MSPs already had PSLs in place because they did direct recruitment as well as a business. And we've already seen one or two of the big MSPs send out communications to recruitment agencies to say, this is our plan, this is our PSL, and this is the date that you need to be in line with this new PSL. But I think between now and the end of January, we're going to see far, far more of those communications coming out from big players in the market saying, in the main, we have a PSL and you have to utilize that PSL. There might be the odd company that goes down the route of saying, actually, we're going to look at having certain accreditations, is the stipulation. But we are meeting with a lot of businesses at the moment at an MSP neutral vendor level. And in the main, they are saying you have to use our PSL. And that PSL is going to be in place by the end of January.
Mm-hmm. And obviously, I was talking before about agencies needing to do sort of really enhanced and detailed due diligence on their umbrella companies. So I guess that means Sapphire is starting to get questions from your agency partners about, how can you satisfy us that you're sort of operating compliantly, and how are you responding to that?
Yeah, I'd say in the main, the three big ticket items right now are compliance and accreditations, our finances and financial stability, and then service levels. I think if we start with compliance, obviously compliance has always been really hot within our market, and there's been accreditations around for a number of years. And the majority of the market have already had PSLs in place where they dictate certain accreditations. So that's not new to anyone. But what we are doing is we're seeing far more businesses dictating that we potentially have to have both FCSA and SafeRec. That seems to be the current train of thought. I'm sure most people on this webinar will know who FCSA are because they've been around for a really long time, and we're obviously FCSA accredited. I think most people by now will also know who SafeRec are because Seb's done a very good job of communicating that to the market, as have the providers that have SafeRec. But just to give a real short overview of SafeRec, obviously from a compliance point of view, agencies and MSPs need to ensure that the umbrellas that are engaging are only offering pay-as-you-earn and traditional pay-as-you-earn umbrella solutions, and they're deducting the correct pay-as-you-earn tax and national insurance and paying it over to HMRC. What SafeRec does is it's actually an AI software that integrates and APIs into an umbrella's payroll software. So every single payslip that an umbrella runs every single week is sent over to the SafeRec tool, and it's audited in real time so that that tool can check all of the pay-as-you-earn deductions on that payslip to make sure that that's compliant and correct. Now, that's just step one. Obviously, there have been scenarios in the market where the tax avoidance schemes provide fake payslips. So just checking a payslip is just the very first step that needs to be taken. What SafeRec software then does is it matches up the information that's on the PAYE payslip with actually what's on the RTI information that's sent over to HMRC, so that the data that's on the payslip definitely and specifically matches the information that's been sent to HMRC. So that's the second step. And then beyond that, obviously, providing a compliant service and running those payslips and sending that information to HMRC is the first couple of steps. But actually, the final step and the most important step for agencies and MSPs right now is that the actual pay-as-you-earn is paid to HMRC. And it's paid to HMRC accurately and on time, because no matter how compliant a business is, until that money and that pay-as-you-earn is paid to HMRC, there's still a risk and a liability there. There is. So what SafeRec do as the final step is once a month, they jump on a Teams meeting with everybody that's certified by SafeRec to log onto their HMRC pay-as-you-earn dashboard to check that they've actually paid the pay-as-you-earn accurately and on time. And it's only when they've gone through those three steps that they then generate the SafeRec reports that are sent out to the agencies on a monthly basis to say, you've had all of these candidates paid by X umbrella and they're compliant. So it's really detailed, the depths that SafeRec have gone to demonstrate this. There are a couple of other things that we're doing specifically as a business as well to share more direct information directly with our clients to provide more transparency around when payments are made. So that's compliance. The second bit is financial stability. You mentioned it, and as I've just said, until we make our pay-as-you-earn payments, there's a risk that's there. So you could be working with a compliant business. Unfortunately, if that business runs compliant payslips and on Friday they make their pay-as-you-earn calculations, they pay the candidates. Obviously, PAYE isn't paid till the 22nd of the following month. So say next week, an umbrella company goes bust, and because they've made some poor business decisions, and that doesn't happen, it doesn't happen very often, but there are the odd case of where this has happened over the past couple of decades. There definitely are. And because the page has not been paid, HMRC can then go back to that relevant party to ask for the PAYE. So what we're finding is our clients are wanting far more detailed information around our financial stability, and they're looking at our businesses run sustainably. Do they make sustainable decisions with their finances? Do they have enough cash in their reserves? They're looking at credit checks, they're doing acid tests. There's far more information that's been looked at, even beyond audited accounts. So yeah, we're definitely seeing that actually how financially stable we are as a business is having a big impact on those decisions that are being made. And then finally, the compliance and the financial stability bit is the real risk to joint and several liability. But actually, PSLs aren't just being implemented and put in place because of joint and several liability risk. And there are other risks that can be in play depending on the providers that you engage with, i.e., if you work with umbrella companies that don't provide a great service, although it's not joint and several liability risk for pay as you earn, that's got the potential to have reputational risk, and there is the potential for loss of candidates or loss of clients if recruitment agencies engage with umbrellas that don't provide a great service. So whilst agencies are looking at compliance and financial stability as the core foundations of how they're doing their current PSL reviews and tenders, actually the service levels that businesses offer to agencies are really key as well. And definitely we're getting more questions around, recommendations from other agencies, testimonials, things like online reviews are being looked at. And then we have seen agencies doing their own questionnaires out to their current contractor base and their current, their consultants to ask for feedback on the service that they've got to date from those businesses. So yeah, they're the three main things I would say: compliance and accreditations, financial stability, and service levels.
I think if I could, I might just add one as well, which is not really about the DD on the umbrella company, but it's about internal training within the agency's business, because it's all well and good if, the people that are on this call now are compliance directors, ops directors, FDs, who, might tick all the boxes in terms of a really tight and robust PSL. But actually, if you've got consultants within your agency who are going off piste and, making arrangements, for example, to deal with an umbrella company which isn't on the PSL, then already there's potential significant liability. And equally, if you have people in the business who are carrying out due diligence on the umbrella company, it's just no use it being a tick box exercise and you sending out a bunch of questions and you getting the responses back and sticking them on the system or sticking them in a cupboard and never looking at them again. The people within your business that are carrying out this due diligence, who are checking, the PAYE is being accurately paid each month, keeping an eye on the sort of financial stability of the umbrella companies, they really need to understand what it is that they're looking out for. So I think training for sort of recruitment consultants and others within the agency's business is also really key.
I totally agree, to be honest, because there is, and especially in certain sectors, there is going to be a lot of contractors that do need to transition to a new umbrella at the start of next year. And as a rule, recruitment consultants will have to be a part of that conversation because they're the ones that hold relationships. And obviously, there's going to be a lot of conversations that need to be had. Some businesses might not have that many. Some might have 1,000, some might have thousands. So it is really key, as you said, that recruitment consultants understand this legislation. It might not necessarily have to be to the same level of expertise as a compliance and legal director, but we have already been engaging with our clients to date over the last few weeks to provide training to recruitment consultants on the umbrella legislation, so like a shortened down version of what we're going through today. So I suppose that offer is there for any agencies that need that level of support. And finally, from me, and then Hannah, I'll see if you've got any final bits to add. I suppose today's webinar was all about just ensuring that our clients understand that final draft, and I wanted to focus specifically on the legislation. As a business, if you'd like to hear more about what we're doing to reduce our clients' risk, we do have a separate presentation that we can present to our clients around our value proposition of what we're offering. And outside of the things that we've discussed on here today, there are a number of additional measures and steps that we're putting in place to provide extra transparency to our agencies, to give them that level of comfort that we are one of those businesses that they want to put their trust in moving forward. So I don't want to get into that detail today because it was all around the legislation, but if you are keen and you do want to understand more about what we're doing specifically, then feel free to reach out, drop me an email, and we can get a separate conversation set up. Hannah, I suppose, is there anything else from your side that you wanted to add today?
No, not particularly. I mean, I hope you've all found that pretty comprehensive. I mean, if anyone does have any questions, pop them in the Q&A. We have had one already. It's probably one for you, Alex, just around SafeRec. And the question is whether the contractors themselves are provided with details of the sort of SafeRec report or confirmation that their own PAYE has been accounted for.
Yeah, that's a good question, actually, and one that most people don't ask, so we don't talk about it too often. But yes, as well as the agency is getting a specific monthly report, and the contractors themselves, every time a payslip's run and it's compliant, they get an email to say this payslip is compliant, and they can opt out of those communications, but they automatically go to the candidates, and so that they can see that as well. Because I appreciate, a lot of the challenge over the next few months is going to be around candidates that have perhaps utilised non-compliant solutions to date, and tax avoidance schemes. They're going to be the most difficult conversations. And I suppose then those candidates actually seeing something on an ongoing basis to say this is compliant just hold more weight to it.
Mm-hmm. Absolutely. Someone's just asked whether this session is being recorded and whether they can get a copy.
It has, yes. We have recorded this session, so we can send out a follow-up. That's absolutely fine. Any more questions on the Q&A?
So far, no more, but this is your opportunity if you want to sneak one.
If anyone's got any questions, let us know. If not, obviously, I'm available. You can drop me an email. The main takeaway here is there hasn't been loads of change really from the draft. So everything in the main that you've learned today around joint and several liability remains the same with the umbrella legislation. This is coming. It's coming in April. Hopefully there are businesses that don't have loads to do and there isn't loads of change, but I know that there are definitely a lot of people within the industry and a lot of companies that do need support with this, because there is going to be a fair chunk of work that needs to happen at the start of next year. So hopefully we can all enjoy our Christmases, and then we'll have the onslaught of getting through January, February, March before we get into April, and it's here.
So we have just had one last question, Alex, which is kind of following on from what you were saying just before. Someone's asking, what can we do to get workers to use our PSL umbrellas? And I mean, I'll let you expand on it, but it is tricky. As you were saying, the reality is that, some agencies don't have a PSL or are willing to let workers, go off PSL. And I think often the reality why workers want to use a different umbrella is because they're getting higher take-home pay, and higher take-home pay that cannot be achieved unless there is some sort of tax avoidance or inappropriate engagement structure, such as putting them through a PSC when they're not self-employed. So it's a tricky one. I mean, have you got any thoughts on that?
Yeah, I'll be honest. I think come January, February next year, I think it will be a case of recruitment businesses are going to dictate their PSLs. And I actually think that candidates will no longer, in the main, have a choice as to whether they go through the PSL or not, because I think the whole market is going to move to this at pretty much the same time. So it won't be a case of, well, you won't let me go with this umbrella, but another agency will. And I'm not saying that 100% of businesses are going to fall in line with joint and several liability, but 99.9% of businesses will. So I think it will be an easier challenge next year when everybody is dictating the same thing with the PSL. Obviously, we're here to support. It has been, as a business, we've had a challenge over the last couple of years because we speak to candidates to sign up to our compliant services and they're already speaking to a separate tax avoidance scheme, and we're trying to educate those candidates on the risks that they are putting themselves in, because they are at risk, because candidates over the years have had massive tax bills for using these tax avoidance schemes. It's not like that's never happened. There's been some pretty big articles around people actually been landed with tax bills and losing the houses, for example. So I suppose what I would say is we're here to support. Our internal onboarding team are trained heavily on this new legislation so that they can have the conversations off the back of recruitment consultants having the conversations with their candidates to back up what you guys are telling them in terms of, look, this legislation has come in, this risk is happening now from April, the market is moving this way, every business will have a PSL and contractors will have to go with the PSLs moving forwards. So yeah, we're here to support those conversations.
And I think helpfully, I'm not going to say helpfully for a change, but the government has recently been running a sort of campaign aimed at workers and contractors. I heard an ad on the radio just a couple of weeks ago, which was aimed at ensuring that sort of contractors and temporary workers are alive to the fact that actually, they might be being offered higher take-home pay, but there's a risk that that is a non-compliant umbrella or a non-compliant scheme. So there are also sort of gov.uk web pages that you could refer workers to that explain that in a bit more detail, and sort of that's an independent explanation of the situation, whereas they might just, there's a risk that obviously they feel that you or the umbrella company is you know simply trying to spin them a yarn, but actually if you can point them to gov.uk literature which explains this issue to them, that might help as well.
Yeah, and I think lastly, I suppose we've talked there mainly about candidates with potential tax avoidance schemes moving into compliant umbrella solutions, but there is going to be a change in the market where candidates are having to move from a compliant umbrella solution into another compliant umbrella solution because PSLs have been put in place. So, and I think that is probably, obviously, it is a different conversation. It is. And my advice for those conversations would be it's around understanding those that you've got on the PSL and understanding all of the specific benefits that they offer, i.e., you may get a candidate that's with one umbrella company that says, well, I don't want to move to your PSL because with this umbrella company, I'm paying into my private pension. So then it's about the business understanding, well, the companies that are on our PSL, who offers payments into a private pension, so that isn't an objection that we can't overcome. It might be, oh, I've got a workplace pension with this company. And then it's understanding who on the PSL who can support facilitating that. So it's then about getting into the nitty gritty of the actual companies that you've decided to have on your PSL. What are all those service offerings so that you can provide some objection handling guidance to the recruitment consultants to aid them in the conversations that they're having, so that there isn't any reason why people need to stay with their current umbrella. Obviously, there is the question of, like continued employment, that is, but we are where we are with that. I think, unfortunately, people are going to have to switch because businesses don't want that joint and several liability risk. So we've actually created some objection handling guides for recruitment consultants and for recruitment businesses. So again, if anybody would find it useful to have those objection handling tools, let me know and I can share those. Amazing. Well, look, thank you very much for joining us, Hannah. Hopefully everybody found that useful and everybody's now fully up to speed of where we're going into April next year. If anyone's got any other questions, as Hannah said, you did contact details. We're on these slides. You've got mine there. Feel free to reach out. And yeah, enjoy your Christmases, everyone. Thanks, Hannah.
Thanks.